Hello everyone, my name is Denise Delaney. I'm a senior advisor with Index Fund Advisors. Many of you know me. I just wanted to record my summary of the IFA Town Hall that we did last week. And it was just so interesting and powerful. And right now we're in election season, and so you have many clients that are concerned about the market, depending on who wins the election and so on. So I just wanted to bring up the point, first of all, that we have so many articles and videos on IFA.com, and there was a recent article where we talked about historical elections that was actually covered in the IFA Town Hall. And so if you would like to review those things, just go to IFA.com and go to videos or articles. There are hundreds of them, literally, that you can check out and send us questions anytime you want to. So there were a couple of things in particular that I wanted to summarize for my clients, and I wish I could say that it was required watching to view these town halls and quarterly reviews that Mark tapes every quarter. They're just so important, and I think will answer a lot of your questions. So this is what I wanted to hit on first. This is called the Hebner model, which is a way to explain price and how markets have worked. So the idea is that prices are fair. So the price includes all available information and forecasts. So right now, when you're thinking about the market, remember that the price sets automatically to reflect all the information, the news, and then what we expect to happen. And what that does is it gives us an opportunity to have a future expectation of a positive return. So first of all, you have to have a willing buyer and a willing seller in order to have a transaction, and the price has to be fair in order to have a positive expected monthly return. This chart is taking monthly returns for a portfolio 100. And it shows you that the expected monthly return for a portfolio 100 is just as slightly over 1% per month. So the price has to adjust so that expected return will continue to be the expected return. But this chart is probably one of the hardest charts to understand and to accept, that prices are already embedding all known information. So this is just something that we have to review it and review it and review it, because our behavior stems from understanding this information, and it's really the most important thing when understanding how markets work. So you say, well, where do my returns come from? How much risk are you taking? And profitability of companies. So this is just a quick review. So here you have size premium, value premium, and profitability premium. All of these factors are what contribute to the returns of the stocks in your portfolio. And we've broken this chart down from US to international to emerging markets. So you can look at all three asset categories to see historically what the returns have been. Last but not least, as a takeaway from the town hall meeting that we had, I found it fascinating and so helpful to myself. And so I wanted to just give you some bullet points about what I heard during the meeting. We've got to disentangle our emotions from our investment decisions. Let me say that again. disentangle our emotions from our investment decisions. Rely on the data, the evidence, and the research. And market is not driven by the election alone. I'm saying that because that's timely, because we're in an election cycle. There are bigger factors that drive market performance, such as what I just showed you: size, value, profitability of companies. And then some of the fears that we have, such as tax changes, higher taxes, lower taxes, all of those things could help, but really there's no guarantee. So again, we adjust ongoing, we figure things out as we go, and we want to stay focused on the right risk level for you, staying the course, don't try to time the market, and continue to benchmark your portfolio. Thank you so much.